You're welcome to this video, and today we're going to be looking at the ABCs of forex trading. Now, one thing that I want you guys to note is, first and foremost, me personally on this channel, I don't teach beginners. Okay, I don't post content for beginners, not yet at least. Okay, I plan to begin dropping content for beginners, those who don't know anything about trading from scratch. But at the moment, the videos that are on my page are not for beginners. Okay, and this video is titled the ABCs of trading, yes, but please note that this is not like we're going to pass through what is a PEEP, what is forex trading, what's a currency pair, which is a base and quote currency. No, we're not doing all that. Okay, the content that I mainly post is also, I think you guys have noticed by looking at the content I post, I don't post about strategies or indicators or any of that. Okay, I teach my strategy, yes, but it's included in my mentorship, which I charge at a fee. Okay, here I just give you guys tips that are going to help you with risk management, things that pertain to trading, but I will never get on the chart like this. Okay, and give my strategy away. No, not for free. Okay, it took me years to build and perfect, so allow me monetize my skill. Okay, so today we're going to be mainly looking at the ABCs of forex trading. Okay, so these are beginner friendly as well, and yeah, so even if you don't have a foundation, this video can still help you. All right, so when you're starting school as a child, when a child reaches that age where they need to start nursery, the parents look for a nursery school and the child begins. Okay, now when that child goes to school, in most nursery schools there's baby class and the middle class and top class. Okay, so obviously by the time you reach top class, you can recite the alphabet without hesitation, you can count numbers and all those things, and even there are few who by that time they can read and write. Okay, so okay, sorry for that distraction. Let's get back to what we're talking about. Okay, so just like how those children, when they're set in school, we give them 3 years, go through baby class, middle class, top class. By the time you finish, you'll be able to have the foundational knowledge, the ABCs, counting up to 100, mixing sounds together. And so it's the steps that you're taking that will eventually help you to get to a point where you can read sentences. Okay, even here it's the same. As a beginner, when you're beginning, take yourself to be like a child. Yes, sorry for those distractions, guys, but I'm now back. So the ABCs of forex, like I was saying, take yourself to be a child. Come into this and focus on the foundational bit of it. Okay, there are a lot of people that come into this game and they always put a time limit. After 2 weeks or even after 2 months, I want to be able to trade an account of $50 and take it to $5,000. Okay, there's no way you take your child to nursery today. Okay, and the child is in baby class and 2 weeks they are able to speak and tell you a full sentence, unless the child is supernaturally gifted. So it's the same with forex. So today we're going to be looking at the ABCs, the foundations that build you as a trader, and we are taking A, B, C. I can also add D, E, and F. Well, actually, I think I'll add D, E, and F. And these are going to be acronyms that are going to help us in our trading journey, okay? Which is why in the beginning I said this video is beginner friendly, all right? Because it applies to you whether you're a beginner, intermediate, or advanced, all right? Okay, so A stands for analysis, all right? Now, analysis is actually can I say, the backbone of trading? Because before you invest in anything, before you choose to buy or sell any currency pair or any commodity, you have to sit down and first analyze, okay? You can analyze the charts, you can analyze the economies. There's a lot of analysis that you can do that will help you to conclude on whether you're going to buy or sell, all right? So let's first look at the types of analysis that we have. Um, okay, so the first one we have is technical analysis. What is wrong with my keyboard? Technical analysis. Now, if you've noticed, this is where a majority of the traders in today's world put all their focus on. 90% of traders put all their focus on technical analysis. Okay? What is technical analysis? Technical analysis is where we'll see things like chart patterns, okay? Indicators like the RSI or the uh, moving average, okay? Support and resistance lines, trend lines, okay? All that is technical analysis. You're basically reading price movement to predict what might happen next, okay? That is technical analysis. The next type of analysis we have is the fundamental analysis, which is ignored by so many traders. So many traders ignore fundamental analysis, yet they don't know that we are trading economies. We are trading economies, all right? So fundamental analysis, this is where we find news, economic data, interest rates, NFP, CPI, speeches, anything that moves currencies, okay? So fundamental analysis is mainly done by looking at the performance of economies and weighing them against the other, okay? If USA increases interest rates, you can come to a chart like GBP USD and you can be able to interpret what does it mean. They have increased the interest rate, so how is that going to affect the dollar? You finding that out is called fundamental analysis. Okay? Then there's also another type of analysis that is rarely talked about, but I'll add it there today. And this is the sentimental analysis. Sentiment. Okay. So this is basically trading of, okay, let me just, sentimental. Okay. I don't know what is wrong with my keyboard today. All right. Sentimental analysis. You're basically trading using senti. Bro, this keyboard is misbehaving today. You are trading using sentiment, okay? Based off of how you feel, you as a trader, all right? It can be based off of market fear or confidence, or, sometimes you go to a broker's page, and on their page, they are showing you on the Euro USD pair, okay? On the Euro USD pair, we have 70% buyers, 30% sellers. Okay. Now, how would you interpret this? Majority of people would go with this, you know. Most of the people are buying. Let me also buy. Then you find that someone else would come and go with this. Majority of the people are selling. Let me sell. Okay. And from experience and from what I've seen, I find that it is better for you to go with, if you trade sentiment and you're the type of trader who follows this, okay, it's better for you to go to the side which has less people, right? Okay, yeah, but of course, add more confluences. Don't just see this and then go and immediately place in multiple sell orders, add more confluences. So these are types of analysis that we have. Now, this analysis is what is going to give you entry, or rather, sorry, reason for entry. All right. Where are you entering the markets? Oh, price has hit my Bollinger Band level. Or people that trade BTMM, beat the market maker. Price is reaching our, I'm forgetting what that box is called. Is it a stop hunt box? I cannot remember. So your analysis basically gives you reason as to why you are entering the markets, all right? And it's very key for you to know why you're entering the market as a trader, okay? If they ask you why you're buying and you say, oh, I'm buying because I feel like buying, when there is no reason, when there is no logical reason as to why you're entering the market, that is when we come here to sentimental analysis. I'm buying because I know market is going to buy. I'm buying because I feel like the market is giving me a signal. But what signal is that you don't even know? Okay, that is sentimental analysis. All right. So let us move to B. Now, please note that these ABCs are very crucial. They are like must-haves for traders. Okay. So B is bias. So what is your bias? Your bias as a trader is your directional idea of the market. Okay. Now, in order to trade well, you need to have a bias. And you can only get your bias after doing your analysis. Okay? I don't know why my keyboard is just. Anyway, you can only get your bias once you have done your analysis. So let me give you guys some examples of a bias. Okay? So, for example, according to your analysis, you go to the 4-hour time frame, and this is what you're seeing. Price is creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And according to your technical analysis, maybe you trade breakout and retest. You see, oh, price broke out, retested here. Okay, wonderful. It broke out again, retested this level. Okay, we're breaking out again. What do you begin to expect? A retracement and a push higher. All right. So your So your bias becomes bullish. All right. Now, you can have a bullish bias, and as you're waiting for price to retest to tap you in, it instead breaks through the level where you were expecting to buy. It breaks through. Then your bias shifts. Price has broken its previous swing low. So we can expect it to retest that swing low area before going down. So your bias changes to bearish. Okay. So you can get your bias through your analysis. All right. For example, now let's use this example of fundamental analysis. You've woken up today and Trump has declared war. The flag of America. Trump has declared war on maybe Russia. So you sit down and you do your fundamental analysis. Just a minute. Okay, I'm back. So we're looking at how you get your bias for fundamental analysis. So we were looking at the example of maybe Trump wakes up one day and he declares war on Russia. Okay, so how you knowing what this will do to the maybe the Euro USD chart is called fundamental analysis, right? Maybe you'll be like, okay, Trump is declaring war on Russia, right? So the US dollar sometimes strengthens in war, okay? When there's global conflict, especially this major global conflict of nuclear powers and all those things, right? So this will make the US dollar stronger. And when the US dollar is stronger, Euro USD will sell. So there you have already gotten a bearish bias. Okay, I'm not really much of a fundamental trader, but I'm just giving you guys an example of how your analysis gives you your bias. All right. So your bias is your directional idea of the market. Is it bullish or bearish according to your analysis? All right. You have to have a bias. Okay. Don't come into trading without having a bias, because what are you doing? Hmm? Have a bias. Have what to expect. Okay. You can do this through market structure, key levels, news and fundamentals, liquidity zones. Without a bias, you are trading blindly. Okay. Very important to note. Without a bias, you are trading blindly. Okay. So let's not be blind. All right. Let's do our research and trade the right way. All right. Which is why you see there are some traders who made a lot of money during the 9/11 when the plane came heading towards 9/11 and eventually crashing, and then hours or rather minutes later another one came and again crashed into the twin towers. The stock market proceeded to crash, but there are people that made money off of that. Okay, because they were doing fundamental analysis. Okay, a plane has just crashed into the twin towers. What does this mean for the American economy? So the result was the market crashed, right? So have a bias. Okay, don't trade blindly, right? Then C is none other than confirmation, right? Now please note that your bias is not an entry into the market. Okay, your bias is just giving you a directional idea. Okay, it's not an entry, it's just an idea, right? Now you need a reason to pull the trigger. All right, you need a reason to say, okay, I can enter at this zone here, or I can't enter at that zone. All right, and this is why we have confirmation. Confirmation is basically price confirming to you that, okay, we were moving, let's say Euro USD, for example, was moving in a bullish manner. Okay, then news came in that planes had crashed into the twin towers. All right, minutes later, another plane comes and crashes again into the twin towers. This does not mean that because you've done fundamental analysis and this is going to cause the market to crash, you immediately go and start pressing sell, 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 sell. And you start putting in all the orders in this world. Sell, 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 sell. No, that is not true. It is just an idea. All right. Now, for you to pull that trigger, you have to wait for price. How, according to your strategy, however you trade, you have to wait for price to give you a confirmation that you know what, we are no longer in an uptrend. We are now going downwards. Okay. And indeed, the market will give you that confirmation and proceed to crash. All right. So you need to have that confirmation. Don't just enter blindly. Okay. And that's another thing that most of the traders do nowadays, which is why majority of them are not profitable. They want to make decisions for the market. They want to tell the market what to do. Maybe they have their key level here. Why is it not visible? Maybe they have their key level here. And they want to sell when price reaches here. Okay. So price begins to come. And as soon as it reaches, they put all the sell positions you can ever imagine in this world. What makes you know that price is going to stop at this level? How do you know that price is going to come, respect that level, and go lower? You can't know without what they call confirmation. You need price to confirm to you that, hey, okay, you know what? We are going lower. And some of the ways that price can confirm, depending on what you trade, we have candlestick patterns. Price can reach here and create for you a candlestick like that, confirming that, hey, hello, the buyers are moving out and the sellers are coming in. Okay, so we have candlestick patterns. Let me actually list them here for you. You guys can go and do more research on this. Candlestick patterns. All right. We also have breaks of structure. When price breaks its previous swing high, okay, it indicates a shift in the trend. Okay, so breaks of structure. Just allow me to remove this. And then we also have retests. Okay, price comes to this level, goes retests again, eventually going down. You find that it can even come back here, retest, and go even lower. All right. So we also have the retests. Now remember, these are signals, okay, that price is like, okay, you know what? We have seen the news is saying that Twin Towers have been bombed, and in fact, it has to make the market go lower, okay? So we also have people that trade the divergence. The divergence is an indicator, confirmatory indicator, that shows you when price is confirming to change the trend. Personally, I do not trade those divergences, but you can do research into them and learn how it can be a method of confirmation. Divergences. Okay. So that is C. All right. Now, remember, all these things work hand in hand together. Not to say that one is better than the other. Okay. So once you know, I have this check, I have this check, I have this check, they all work hand in hand together. You can have analysis, you can have bias, but if you don't have confirmation and you don't wait for confirmation, price can pass through you. Okay, so it's important to make sure you have all of these. So I did say I will add a D, E, and F, but I think we shall do a part 2 where we add D, E, and F. But so far, this is still very insightful. Okay, these ABCs can still help you in your trading journey. Okay, so do research on them, find what works for you, and in all things that you do or in every trade that you do, ask yourself, have I analyzed? Maybe you open the chart of GBP USD. Before you place a trade, ask yourself, have I analyzed the chart? Do I have a bias? And do I have a confirmation that is in line with my bias? Okay, and the rest will all flow naturally. Okay, trading is a very wide the scope at which, okay, there's a lot to learn from this in this trading thing. Okay, today you'll think, okay, as long as I have my strategy, I have my stop loss pips, I have this, then tomorrow you learn that you need to wait for confirmation, then you learn confirmation, then tomorrow you learn you need to know a bias, then you learn bias, then you learn that, you keep learning every day, but in the long run you're getting better. Okay, so it's a game whereby you keep learning every day. Okay, so even as an advanced trader, you can learn something from this. Maybe there's something you didn't know that you have learned from here. So if you guys have any questions, you can leave them in the comments below. I'll answer each and every one of them. If you guys want to reach me personally, my Telegram channel is in the description in my YouTube. There's my description there that has my Telegram channel in it. So I'll see you guys in the next video. This has been helpful. You can subscribe, motivates me to make more videos. Leave a like and share it with someone who might be needing it. I'll see you guys in the next video.